Hey everyone, today we're going to dive deep into a topic that trips up so many American expats: state taxes. There's this common belief that the moment you move overseas, your state tax obligations just disappear. But as we're about to see, that assumption can turn into a really, really expensive mistake. So let me just ask you this straight up. If you're an American living abroad, did you just stop filing and paying taxes to the state you used to live in? It's what a lot of people do, but honestly, it's often based on a huge misunderstanding of how states decide who actually owes the money. And this, right here, is the core of the problem. Even though you might be living thousands of miles away, your old state, especially a high-tax one, could still have a legal claim on your income. And we're not just talking about any US-based income. Nope, we're talking about your entire worldwide income. This whole situation leads us right into what I call the Expat State Tax Trap. It's a nasty surprise that catches so many Americans, sometimes years after they've moved. And it comes with a lovely package of back taxes, penalties, and interest. All right, let's get into the weeds here. To really understand this trap, we have to get super clear on two legal concepts states use: residency and domicile. They sound kind of the same, right? But in the tax world, the difference between them is absolutely everything. First up, we've got residency. Now this one's pretty straightforward. It's an objective test, basically just a numbers game. Most states say if you're physically there for more than half the year, that's the 183-day rule you always hear about, you're a resident. So when you pack your bags and move to another country, you pretty clearly fail this test. Easy enough. But then there's domicile. And this is where it gets tricky. Domicile isn't about where you physically are. It's about where your permanent home is legally considered to be. It's the place you intend to return to. And here's the absolute key. Your domicile is sticky. It follows you around the globe until you take very specific, deliberate steps to establish a new one. Just moving to Paris or Singapore, that's not going to cut it. So let's put it this way. Residency is about where your body is. Domicile is about where your life is legally centered. It is way easier to stop being a resident than it is to sever your domicile. And that single distinction right there is the foundation of this entire expat tax trap. Okay, enough with the theory. Let's see how this actually plays out in the real world. And we're going to start with one of the most notoriously aggressive states out there when it comes to taxing former residents: California. You see, California's default position is incredibly simple and powerful. Once a Californian, always a Californian, until you can prove otherwise. The burden of proof is 100% on you to show them that you've decisively cut all ties and set up a new permanent home somewhere else. Think of California's tax agency, the FTB, like a detective. They're going to look at the whole picture of your life. They'll ask, hey, do you still have that California driver's license? Where are your kids living? Do you still have a bank account open just in case? How often are you flying back? Every single one of those is a thread that connects you back to the state. And in their eyes, it just reinforces your California domicile. And this is where the financial hammer really drops. You know how on your federal tax return, you can exclude a big chunk of your foreign salary using the Foreign Earned Income Exclusion, the FEIE? Well, if California still sees you as a domiciliary, guess what? They give you zero credit for that. They're going to tax every single dollar. Let's just look at the raw numbers here, because this is wild. Let's say you're making $150,000 abroad. For federal taxes, after the FEIE, you might only be taxed on $20,000. But for California, they're looking at the full $150,000. That difference creates a state tax bill of over $11,000. Money you probably had no idea you even owed. Now, if you thought California was tough, let's take a look at Virginia. They have a unique rule that creates a totally different kind of trap, and for some expats, it's even harder to get out of. So here it is, the critical piece of Virginia law. To break up with them, you have to establish a new domicile in another state. Notice it says state, not country. To them, moving to a foreign country just doesn't count. They basically argue that your permanent home remains Virginia unless you plant your flag in another U.S. state first. So what does that actually mean? It means if you move from Arlington straight to London, as far as Virginia is concerned, you never left. You're still a Virginia domiciliary, and they can keep taxing your worldwide income year after year indefinitely until you physically move back to the U.S. and officially set up shop in, say, Florida or Texas. It's crazy.
Okay, so after hearing about all these challenges, you're probably asking, so how in the world do I get this right? Well, the answer is all about proactive planning. There's a solid, strategic way to make a clean break with your old state before you even get on that international flight. This four-step process is really the gold standard. Instead of moving directly from, say, New York to Spain, you create a pit stop. You first move to a state with zero income tax, like Florida, Texas, or Nevada. You actually live there for a bit, you establish it as your new home base, and only then do you make the big move abroad.
Now let's be clear, establishing domicile isn't just a paper exercise. It's a real thing. It means you're getting a new driver's license, you're registering to vote there, you're opening local bank accounts, you're renting an apartment. You have to create an undeniable paper trail that screams, "This new state is now my permanent home." So what's the big takeaway here? This isn't some minor detail you can just figure out later. Deciding on your state of domicile before you move abroad is one of the single most critical decisions you will make in your entire expat financial plan. Getting this right can save you tens, maybe even hundreds of thousands of dollars in the long run. And that leaves us with one last question for you to really think about. Your state domicile. It's like your legal and financial anchor to the US, and it follows you everywhere. So is yours the result of a deliberate, strategic choice? Or is it just a leftover from where you happen to live last? Because the answer to that question has massive financial consequences. Thanks for tuning in.